Of the Bondex community for another weekend edition of our live stream. Today we have Dan, the CM of InsurAce.io. We're very lucky to have him, and without further ado, I'm going to let him give an introduction about himself and his company.
Hi, I'm Dan Thomson. I'm the CMO over at InsurAce.io. InsurAce is a DeFi insurance protocol, the fastest growing in the market, built on Ethereum and also deployed onto Binance, Polygon, Avalanche, and Binance, Polygon, Avalanche chains. We actually cover over 16 different public chains and with 122 different protocols built onto those chains. To date, we've covered around 250 million worth of assets, and since our deployment and our launch, our mainnet launch about 9-10 months ago. DeFi insurance basically works by the capital provided by our stakers, which we call our underwriting mining, is then spread between the different protocols, allowing for certain capacity for each protocol for other users to come and purchase, and that basically insures them against smart contract risks, stablecoin depeg risks, custodian risks, or for like trading accounts, for example, and IDO event risk. So, for example, maybe a user's got say $10,000 staked into Anchor protocol on Terra, and maybe they've got 10,000 in UST staked into Anchor. They would be getting their 19-20% returns on that. And then the two risks they would have with that would be the UST depegging and also Anchor sort of smart contract vulnerabilities or risk or a hack. So by insuring with us for around somewhere between up to around 2.5% for just the smart contract risk, or 4% if you include the UST depeg risk as well. So you're looking at 4% cost on a 20% return. So you're basically saying that you can get a fixed guaranteed return on a stable coin investment into Anchor protocol before you can then go and borrow against that as well. So you could be making even higher returns off a base fixed return of 16%, which is especially in the current market is gold dust. It's incredible.
That is very incredible, super interesting. And just for me, and forgive my ignorance, this is the consumer or the trader that would be paying for it, and it would be integrated into the trading platform or the chain.
Kind of. So the user themselves would be a sort of DeFi user, someone looking to ape into a particular project, stake into get some tasty gains. It could be on Anchor, it could be on Beefy Finance, Auto Farm. You could be looking at Alpha Homora, Olympus DAO, for example. All of these different protocols offer quite generous returns. So as a user, which could be an individual like you or I, it could be a fund, or it could be an institution who's looking to stake their finances into these protocols. They then would come to our app to purchase their insurance separately.
So it's very funny, as I mentioned before we jumped on the call, my background is actually originally as a financial institutions group M&A banker. So I got familiar with the world of insurance and life insurance, and then ended up focusing on banking and fintech because I found insurance way too complicated. So I'd love to hear from you. What are some of the ways in which blockchain makes insurance less complicated and streamlines it through smart contract technology and other things like that?
Sure. So, I mean, the immediate one is the decentralization of it, obviously. So instead of just focusing on one reinsurance company and then another reinsurance company, essentially a house of cards all the way back to the government, it puts the onus back on the users and the people who are willing to underwrite the risk through staking with us, and they get their returns for doing so. But the main difference is also just the speed and transparency of it. So in the event of a claim, the whole claims process is completely transparent and can be completed within 10 days. So say you got hacked today, you'd have your funds refunded to you within a 10-day process. You try and do that with any sort of traditional insurance company, and they wouldn't even get someone down to talk to you in 10 days. So it's the main difference is really the sort of speed, transparency. Again, all the sort of reasons blockchain in general is a good thing, can be applied to the insurance market as well.
That's fantastic. And I guess this will only apply to crypto natives at the moment, but do you see this kind of later being applicable to the general insurance market and you guys competing with the classic institutions in there?
Yeah, so it's interesting. So while it is only applicable to blockchain tech for now and smart contract hacks, what we call sort of objective event. So obviously when there's a hack, it's pretty obvious there's a hack, and the protocol admit there's a hack, and you can see the funds being withdrawn to a hacker wallet, right? The issue is actually when we come to the institutions coming into the space, they're looking at, covering their assets. So, we have daily calls with funds now who are looking to buy insurance, who are looking to cover their assets that they've got staked into various DeFi protocols and are getting into the space with. So, they're looking for bigger and bigger positions, which, actually creates a problem because, we don't necessarily have the capacity. And in a $300 billion DeFi market, no single insurance protocol has that kind of capacity to cover it. So capacity is a big issue. So we require like more stakers, more people coming in to back us up. And this is actually where we've started to bridge the gap to traditional insurance, traditional finance. So by finding ways that initially, for now, traditional insurers can actually, find ways to underwrite us. Now, not just one, but maybe a few of them coming in, either staking with us or finding some other vehicle which they provide that sort of additional reinsurance, actually allows us to increase our capacity. They can actually dip their toe into the space and get either a profit share or some kind of rewards for helping with that capacity. But then in the long term, it actually goes backwards as well. So because of our efficiencies, because of our faster and better models, at some point we can turn our head to the more sort of subjective events, the private key loss, the traditional, let's say, errors and omissions insurance. There's all the different typical forms of negligence or other types of insurable activities in the finance world, can be almost solved with DeFi solutions. And so that's where in the sort of longer term, we can actually turn our heads to and work backwards that way. But the initial sort of chicken and egg thing stage we're in right now is that we are getting approached by bigger and bigger money coming into the space, and the capacity we have it's not always there. So you're using an example of Terra and Anchor earlier. We could expand our capacity by 20 times on that sort of combination of products, and we could still sell out within a week. So we literally just cannot have the capacity to for certain protocols or certain projects.
Makes complete sense. Super interesting. And before I want to ask you a two-part question. The second one will be, what are some of the applications that you're going to be covering in the future, which you mentioned before, but this is more subjective, which is, do you ever see a car insurance, for example, contract being done on the blockchain?
Yeah. So which protocols we'll be covering? So we actually have an outreach list of a couple of hundred protocols. So anything that has like at least 10 million TVLs, been live for at least a month, and has at least one reputable audit is on our target list. We obviously look at the top lists on like DeFi Llama, and obviously protocols that we get introduced to or we have demand for are top of the list. So they're the ones we have priority for. How we would then bridge back to something like car insurance, I mean, it's obviously the end goal of this is to make everything safer and actually provide insurance solutions that are better than the existing models. I mean, we all had car insurance. We all can't stand it because it's usually an essential thing as part of a
with horrible customer service, and obviously insurance ends up trying to screw you and terrible.
I mean, traditional. You can't really say it, but at the end of the day, the traditional insurance market is basically a giant Ponzi scheme, right? It's like you pay your money, you pay your money in, and then in the event of a claim, it takes forever for them to pay back out, and they try and hold back from paying out for as long as possible until they've got more money coming in, right? So you're getting paid out by the new money coming in. So
that's a terrifying way to view it, but I think it's accurate.
I mean, the lucky thing is, at the end of the day, it's then reinsured by other companies, or then reinsured by a government at some level, right? So in some ways, it's short of them having a big run on payouts or being forced to pay out for some big event that they didn't before. That's the only reason that some insurance companies just won't have that problem. But at the end of the day, if they did have that problem, then there would be a big run on it, and it would be a big issue. So in terms of tackling things like car insurance, yes, it does become a lot more subjective than just code being hacked or funds being withdrawn to a hacker wallet, right? So there are solutions to that, and there are ways that we can tackle this. So at the moment, our governance voters in our protocol, the ones who are token holders who stake with us, they're the ones who vote on whether a claim is accepted or rejected. Because again, the objective nature of smart contract hacks and vulnerabilities is fairly objective and obvious. Whereas if we were to then install a sort of a second DAO system, so an independent DAO of jurors like Claros.io, which is a great protocol, would allow us to essentially have a secondary vote on any topic, which should remove any possible subjectivity from our side or any conflicts of interest from the protocol itself. So, with sufficient evidence being submitted, you should be able to, see and vote on claims and make a payout pretty quick. And it's these kind of things that combined with transparent data on available funds really means that you can't oversell your insurance, which means there's always capital available to pay out, which means there's no incentive to hold back from paying out. Quite the opposite. I mean, you actually want to be paying out fast, doing what you're meant to be doing, because it shows that you're actually are there to pay out, and you will actually operate the way people want you to.
That makes sense, and that's fantastic. And something else regarding insurance, which a lot of people don't realize, is, for example, life insurance. It's actually a massive, maybe some of the largest investors in the world come from those pools. And I've seen from your website that you're actually putting together an investment portal. So I'd want to hear about that type of product that you guys are developing or getting ready to launch.
Yeah, so the investment model is actually directly from the traditional insurance business model. So traditional insurance would work on the fact that not only would they not pay out for a while because they'd be raising the money to pay out with in a Ponzi scheme style, they would also be using the available funds that are meant to be there to pay out to then basically invest it into various other assets to generate higher incomes as well, and that those essentially borrowing their customers' funds to use as investment funds is a bit cheeky, but completely legal in most countries, and that's why insurance companies have historically been quite profitable. So in the same way, we can take, let's say, 10% of our TVL and 10% of our TVL plus a portion of our sort of revenues from our premiums, as well as opening up an investment arm of the business where we can allow users to stake with us in either high risk or low risk pools, and then go with, because we basically do these our sort of risk assessments and due diligence on all these different protocols anyway, so we know the ones that are good, we know the teams that are good, we know the projects that are essentially investment and yield aggregators that work well. So we can work with our existing partners to develop a really strong DeFi strategy to generate higher returns. So even if we're generating, say, 20% on, let's say we take 10% of our 40 million TVL plus 20% of our existing sort of premium so far. So that's a pool of about, let's say, 5 million to begin with, and we generate 20% on that. That's an extra $1 million a year worth of income for something we're already doing. And even then, we can just be smart about it. We don't have to. We can only invest into DeFi protocols that will allow us to withdraw the funds faster than our payout system is on our protocol. But the actual likelihood of needing to use all of the available funds in our protocol is very slim. So this capital will technically always be available to use for investment income anyway.
This is fascinating. I think who could have thought? I mean, no, I could have thought. Obviously, Web3 was the only chance that insurance would ever get sexy. And I really love everything you guys are doing. I'd like to take it more about.
I like that you can you get past my docile tones as well. I know my voice can be quite calming about it, but yeah, no, it really is actually very exciting.
It's super exciting, and I wanted to also ask you more about the company, how you got started. What is the origin story of the company?
Sure. So Oliver, our CEO founder, he's based out of Singapore with a background working as a CTO of one of Asia's largest fintech exchanges, and was tasked with analyzing and integrating the sort of insurance market for Asia. At the same time, it was like sort of early DeFi summer, so it was like mid 2020, and then in September he had the idea to basically create a Web3 version of insurance. And so he spent the following sort of 5-6 months building the product with our CTO and our lead tech. And by sort of February this time last year and March, they're ready. They launched Token in March, and then I joined on in April, and launched our mainnet, and the rest has just been a very, very sort of whirlwind year of DeFi building and growing.
That's awesome. And now I want to get a bit more personal, Dan. I want to hear about your origin story with crypto Web3. How did you get into it? What were you doing before? We've chatted about this, but I always love to hear the professionals that are taking it and pushing the envelope in Web3. How did they get started on this journey? How did they get down the rabbit hole?
Oh yeah, straight down the rabbit hole. I got very lucky. So I've got a mixture of finance and hospitality background, but I was actually running a chain of juice bars out in London at the time. And
which chain?
It's called Supernatural.
I know that. I've lived in London for 6 years. Now I'm in Miami, but I know it. Great juices.
Thanks. And so we had a stall in Old Street Station for a while, and they had the first Bitcoin ATM coming through, and we're talking about like payment solution issues with I think a friend of mine who works at one of the local banks, and I won't name the company, was dealing with at the time, but let's say it was frustrating and expensive, and he'd just heard about cryptocurrency and its potential and read the sort of Satoshi white paper and passed it on to me, and I could see the future, and I could see how it could be a good thing for the space. So I got very lucky. I bought a load of Bitcoin back then, and have held on to it ever since. Hodled hard through the good and the bad. And I think it was around 2017 when we'd expanded internationally with the juice bars to Spain and Gibraltar that I actually was a partner in Europe's first index fund based out of Gibraltar. So we basically created a very, very simple index fund for some private clients, and ran that for a couple of years before I decided to leave. And at the same time, the sort of pandemic happened, and unfortunately closed my restaurants and bars. And I kind of moved straight into, I actually went traveling for a little bit first in the pandemic. Not the best idea I think I've ever had. But then after a while, I just got more and more into crypto. I see the future of DeFi summer was happening, and just got, fell hard down the rabbit hole with finally what was meant to be happening. The advent of decentralized exchanges was, the big thing that we were missing in 2017. So all of a sudden, you've got these decentralized exchanges, you've got decentralized protocols, you've got all these different solutions coming out, all these different sort of theories and subgroups and different protocols just solving and just evolving as well. And that's where it just got super exciting, and I was very lucky to come across InsurAce at the very early stage, and just aped in hard and been here ever since.
Nice. I love it. And that takes me to my last question of the interview, and we're near the end of this live stream session. I wanted to ask you something that we ask everyone. First disclosure is this is not financial advice from Bondex or from InsurAce, from Dan or from Ignacio Palmera. This is not financial advice whatsoever, but we'd like to get a kind of a take from everyone on what they think of the current market conditions and where the market's going.
Sure. I'm still very bullish in the long term. My investment sort of scale for crypto as a whole is very, very long term, and luckily I work in the space, so it's I get to see all the good opportunities coming out here and there, and all different new protocols. Personally, this year is going to be tough. I think between the inflation rates we're currently seeing, and obviously the trouble in Ukraine, Russia, and I'm just waiting for the British or the Americans to go and do something stupid now. And,
really? Let's hope not. I mean, fingers crossed.
No, we don't need to get into politics too much, but that's just a very personal opinion. In terms of the crypto markets as a whole, though, I mean, if you'd asked me like a few weeks ago, even 2 weeks ago, I'd have doubled down on Phantom and told you Phantom's the way this year, and everything's getting super exciting. Less so now after recent announcements. But I still actually am. I think the brain power behind like the Phantom ecosystem and some of the projects being built in there is great. So I think it's going to bounce back. But the long term, if Cosmos as an ecosystem figures out what they are really trying to solve, and because at the moment the brain power on the building projects on Cosmos is incredible. You've got some of the smartest people I think I've ever been in a room with, all working on the Cosmos ecosystem, but they're solving problems that don't really exist. They're just trying to fix things like blockchain application for when we move to Mars. Like it just doesn't. It's not something we need to be worrying about yet. As soon as they figure that out and they find a bit of direction, I think Cosmos is going to be a much it will be probably a groundbreaking piece of technology. Otherwise, yeah, I'm big on the bigger ecosystems, Ethereum, Solana, Terra. I think that they're all evolving at their own pace, and it's going to be an extremely exciting couple of years. I mean, the amount of cash in these things, in these ecosystems, the amount of brain power that's being like plowed into them is just everyone says it's too big to fail in terms of financial model. I think that the brain power in these projects is too big to fail. The level of intelligence, the level of the people you meet. I'm very fortunate to now follow cryptocurrencies, crypto conferences around the world, and I'm actually in Rio de Janeiro now for the Ethereum Rio conference next week. And even meeting people today ahead of the conference, you've got some seriously intelligent people doing some really, really cool stuff in the space. So, on the whole, still very, very positive about market sentiment.
Same we are here, and I'll end this message with telling everyone, start looking for some Web3 jobs. You will not regret it, because same here. We're very, 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 very bullish on Web3 as a whole. And Daniel, thank you very much for being with us. Best of luck with InsurAce, and we're very excited to see where the company goes.
My pleasure.